All right, just got off work. It's time to talk about Plug Power stock. I know a lot of you are probably pretty interested in this one because, well, this is a pretty hot stock right now. It's one I've been pretty high on for a while, and I've mentioned it as one of my top speculative stocks that I currently own. And a lot of people, sometimes you got to show the proof. I wish I had a larger position in this, but I have 30 shares at a average cost of 221. Not that much, all things considered, and I wish I had more. Looking for some opportunities to buy back in too, buy a little bit extra. But just to prove, obviously, I'm a shareholder of this company. It's one that I'm pretty high on for the long term. So, Plug Power is one of the best speculative stocks in my opinion that I own. So pretty excited about that. They reported earnings, and we're going to take a look at that. They posted a quarter one GAAP EPS of negative 12 cents, in which they missed by 2 cents. Not good, but again, this is a company that you don't really see profit on. They're typically right around the flat to negative levels, so nothing crazy. But what I do think is crazy is this revenue line here, 40.8 million, up 90% nearly year over year. They beat by 6.5 million. That's a massive beat. This is a company that set out some guidance just a while back last year. They set out a guidance to get that they were going to be making $1 billion in annual revenue by 2024. And when you look at 90% year-over-year growth in revenue, it looks like they're definitely making a feasible effort to make this happen. They're definitely, that's just a lovely quarter revenue growth in my opinion. And you didn't see, with that massive growth, you didn't see an awful hit in EPS. So, same quarter a year ago, they had a net loss of 14 cents actually. So actually it was a better quarter in all aspects year over year. Just a lot better. They achieved record gross billings of 43 million during quarter one. They deployed over 1,000 fuel cell systems and had billings associated with 4 hydrogen infrastructure programs in quarter one. It's just the area that keeps growing. And we talk about renewable energies. Hydrogen fuel cells just will become a little bit more important in the future. They just will. They made significant progress on hydrogen vertical integration strategy, pursuing 2 acquisitions. That's right. Just really working on growth right now. That's what they're doing. They reaffirmed guidance to achieve 300 million in gross billings in 2020. Now that's massive growth. Obviously, if you think about it, they just posted a 43 million number here. If they're going to do that over 4 quarters, you're talking about an extra 250 million divided by 3. So they're somehow in the middle of this going to end up getting like 75 million per quarter, if that's what you can look at. Is it feasible? Potentially. 25%, more than 25% growth year over year if we're talking about total for the year, and it's certainly feasible in my opinion. Still remains on track to deliver its 2024 target of $1 billion that continues to build the hydrogen economy. And this is really the leader in hydrogen fuel cells right now. This is an interesting market that if you're not interested in, if you're not looking into it, it's definitely an interesting one to look at. Definitely pretty exciting. So now we're going to look at the shareholder letter. So they made meaningful progress on the hydrogen vertical integration strategy, reduced cost of capital, and they're on path to deliver the 2024 target. They're continuing to operate through the pandemic while prioritizing safety, obviously. Reaffirm guidance. Their reduced interest rate and increase the size of its Generate Capital loan facility to fund them. Significant progress on hydrogen vertical integration strategy. And the company remains on track for 2024 highlight. That's massive. We don't really care much about, in my opinion, this is not a company that's as affected by pandemic as you might see, for sure, in my opinion at least. But with over 32,000 units deployed, 300 million hours of runtime in the field, and over 20 years of innovation, Plug Power is the largest number of fuel cell systems in the field, and its largest user of liquid hydrogen. It is the largest user of liquid hydrogen globally. having essentially built a hydrogen highway across North America. So again, this is a company that hydrogen is massive for. They are the leader right now in hydrogen fuel cells, and obviously they will be. Hydrogen use was at an all-time high, and they deployed 1,000 units during the quarter. Plug products move 25% of the retail food and groceries to the United States. That's right, hydrogen powers that stuff. That number has risen approximately 30% now, actually. That's pretty cool. It's critical that Plug Power products support the need of customers like Walmart and Amazon. That's right, if we talk about these trucks, I mean, hydrogen fuel cells are massive in this. And these are companies that, think about this. These are their main partners right now, Walmart and Amazon. I mean, where more can you think of if you're thinking about a retail partner to be partnered up with? What's a better option for you there? I mean, come on now. Walmart and Amazon are the top ones. So very interesting, good partnerships that this company's got built up already. And if they're successful, they'll continue to get money from these companies. So we're very pleased with the performance of the service team, as our hydrogen and fuel cell products have maintained 99%. That's right, near perfect uptime availability across Walmart, Amazon, and other grocery distribution customer fleets. That's massive stuff. And you only see probably an increase in profit for them and revenue as you look into the future as far as what this impact of pandemic could have on them, as there's really a lot more distribution going out right now out of these warehouses. Fuel cells, these hydrogen fuel cells are super important in that. So, very exciting stuff. Plug Power, a strong relationship with suppliers. We have worked diligently to keep moving parts through our global supply chain to support manufacturing and service operations. Our regionally diversified supply chain consists of companies in America, Europe, and Asia. And we look to maintain dual sourcing for a majority of our parts. In some cases, Plug Power is able to leverage its essential operation status to help suppliers keep their facilities open to the safest degree. Pretty exciting stuff there. Obviously, strong financial results. Look at this just change. 22.8 million versus a 43 million number this time. Just very crazy. Operating loss was a little bit higher, but your adjusted EBITDA was a little bit lower. And you see that GAAP EPS was also a little bit lower as well, a little bit less loss. Now, overall, the income, the loss was a little bit higher, right? I mean, that's just because they did a lot more in terms of revenue. So that's why that number specifically increased. But overall, the GAAP EPS saw a little bit of a step toward normal. So not crazy. I mean, a lot of it's just because service costs being unusually high, as they mention here. And it doesn't shock me at all. Think about a time like this, they could have had a lot more profitable a quarter, but then again, it might have just benefited their revenue a little bit more. So it's really a give or take right now in this kind of economy that we're dealing with. So as far as the first quarter accomplishments, they launched a 125 kilowatt ProGen zero emission engine. That's right. This engine supports heavy duty on and off-road applications, including class 6, 7, and 8 trucks, transit buses, large scale, stationary, and various port applications. They continue to enhance the on-road market offering with lightning systems to build electric fuel cell powered trucks. That's right, baby. We talk about the future, and when you think about companies that are really going to be a big part of the future, this new electric wave, we're talking about electric vehicles even with trucks. I mean, we're talking about not just consumer trucks. We're talking about these big semi trucks going to electric. Plug Power is going to be a major part of that. And they also closed a multi-site anchor customer, GenKey agreement with a 2020 gross billings opportunity of around $50 million. Very exciting. That's really cool. So their GenKey, technically here, they're saying they could get approximately $50 million in gross billings this year from this one customer. And again, a majority of the revenue is made up from Walmart and Amazon. So that's just pretty exciting. So the pandemic is causing a global economic slowdown, affecting business and families around the world. No one is immune to the magnitude, again, as we expect. But they're reaffirming guidance of 300 million for this year. So that's pretty good to look at, all things considered. And you expect really even a better quarter as we go through the year. It's just how it goes because there'll be more delivery going on. Next quarter should be very good, and obviously quarter 4 should be very good. So I think they definitely can hit those targets. So we're talking about ProGen. ProGen is interesting. So Plug Power manufactures fuel cell engines and provides associated hydrogen infrastructure that enables green, sustainable power for companies that demand high asset utilization in the electric world, in an electric world. So again, we talk about a futuristic. This company is really future driven. As we go to more clean and sustainable energy, this is just massive here. Plug Power now provides a zero-emission power solution for every link of the global supply chain. And this is what companies are really going to go to as you think about it. And costs may rise from it, from these other companies. But regardless, this is just a good look for a lot of companies. They're going to want to be doing this. They're going to want to be going electric. It's just what happens. It's just a good image for the public. Yeah, pretty exciting stuff. So we're pleased to announce that Plug Power and Generate Capital have agreed to increase the term loan facility and reduce the interest rate. The term loan facility will be increased by $100 million, and interest rate will be reduced to 9.5 from 12% for its entire facility. Pretty magic there. I mean, that's good stuff. Plug Power has drawn on an incremental $50 million from this term facility. An additional $50 million of borrowing capacity is available to be drawn on, based on mutual agreement. Again, if they need the cash, which is potential, if we talk about a loss of $25 million this quarter, they could need that in, again, 2 quarters. They could need that money, but we'll see exactly how that goes. We'll take a look at their balance sheet for assets as well. Plug Power focused on building the green hydrogen economy. Again, this is massive. So hydrogen is expected to be one of the fastest growing segments of the energy industry, representing as much as 18% of the energy mix by 2050. Plug Power is the largest user of liquid hydrogen, has built more hydrogen refueling stations than anyone else in the world. So what really this means to me, and again, am I holding this stock until 2050? I will be honest. If that's the case, I will. I mean, this is a very long-term play for me because it's only going to grow year and year over year after year. If they keep doing what they're doing right now, they'll be the leader continuously. And this could be a massive portion of the economy, and it will be a massive portion of the economy as we talk about the future, as we expand into more green and clean energy. Hydrogen is going to be playing a massive part in that. And it's sustainable. I mean, it's going to be crazy what things look like in the future. So they give some estimates here. So the hydrogen vision for 2050 is promising. Hydrogen projected to produce 18% of the final energy demand, resulting in 6 gigatons annual of CO2 abatement. For the United States alone, this equates to 14% of energy demand and 16 tons of annual CO2 abatement. That's what it's all about. Get that out of here. Anyways, that's pretty exciting stuff. That's very exciting. Expected to create 30 million jobs globally too. I mean, this is just crazy. Plug Power projects using more than 85 tons of hydrogen a day by 2024 and plans to have over 50% of that be green hydrogen. Green hydrogen generates 0 carbon emissions in its production and usage, and is predominantly produced by utilizing renewable energy and electrolyzers. Pretty crazy. Here they give a chart. Hydrogen is cheaper. It's just very good. The cost of green hydrogen produced using electrolyzers is expected to decline by 50% by 2030 and be cheaper than SMR-based hydrogen. So definitely something to consider there. I mean, you talk about less cost there, but that also means it opens it up to a wider market. So again, profitability could be something to look at potentially for this company, but it is very cool. I don't know. This is there's a lot going on with this company that I really, really like. If we look at the financials, which we love to, we'll zoom in just a little bit because they have a little small cash and cash equivalents on this company. Right now they give a previous quarter. In this quarter, they somehow in cash equivalents, they have half of what they had previously. 139 million versus a 74 million number right now. 74 million dollars right now, which is a little bit interesting to look at. You see an inventory rise though around 20 million, so that's certainly part of it. Total current assets of 277 million versus 313 million as of last quarter. So they spent a lot this quarter, and there's no doubt you see a loss of 26 million included in that. Definitely something to pay, but they repaid some stuff too, so it's definitely something to think about. If we talk about total assets in general, 750 million in terms of total assets versus 771 as of the last quarter. So change of around 32 million. So as far as current liabilities or total liabilities are concerned, we have around 638 million of total liabilities on this company. So you do see, and for a younger startup, I can't say it's a startup company. This company's been around for quite a while, but for a company in the stage that it's at, really to be having more liabilities or more assets than liabilities by, it's not too much, 100 million. It's nice to see though, at least. I like to see that. It's not a beautiful balance sheet, but for a company like this, a speculative type company, I really like it. I think they're poised to have a very good time in the future, honestly. So, in my opinion, I don't think the shares are. I think you're gonna, regardless, if you get in on this company right now, I think that you'll be enjoying your shares come 10 years down the road. I just am not currently buying more because my cost basis is so low. If I can get this thing under $4, I would be happy. And again, I could have. I was buying so many companies when we're talking about when it hit 280 a while back. I was tempted. We're talking a 52-week low of 186. I wish I would have bought some more, plenty more. But I was buying so many companies at that time during this crash that we went through. Maybe we'll have another time if the market crashes again. I'll definitely be picking up plenty of Plug Power.